What is going on, guys? And welcome for tuning in to my third actually ever video on this. Today, I'm just gonna go over my trades that I had the past 2 days. Thursday being a big hit with a big loss. Friday, I kind of recovered a little bit, and near the end of the video, I'm just going to talk about kind of the psychology, just briefly about that comes with trading. So let's get right into it. So my first trade was Beyond Meat, and this was on March 12th. So Beyond Meat. All right, so just go 2 days. All right, so my entry was 954. All right, so market opened, and overall, before the market even opened, as you guys know, the market has been taking a hit, all because of this coronavirus news, and it's just been tanking. So I was looking to go short this day, even though it's not good to have to pick a side going into the market. You just trade what is presented to you. I kind of went in knowing that I wanted to go short. So I was watching Beyond Meat, and I knew that the pre-market low and other areas of support was $70, so I had that level set. So then the market opened, Beyond pushed down a little bit, recovered, and then this is where we had the halt. The halt is when the market goes down around 7%, and they just pause trading for 15 minutes. So 15 minutes, trading was literally just paused. Nothing was happening. And then after that circuit breaker, that's what they call it, a circuit breaker, level 1 circuit breaker, the market resumed trading, and Beyond opened right here. So then I was watching Beyond with these constant bearish candles. And then you see this big, huge red candle with an increase in volume up here. So now I'm looking at Beyond closely, and I'm like, all right, I want to short this stock. So then I wait for the next candle, and it broke. Again, high volume. And then I entered on this next candle, even though it did not fully continue. So my first issue with this trade is that I did not wait for the second candle after the break to continue and show me that this is going to go down even more. I got a little too greedy. I entered, and then I got stuck in this big reversal. So I could have minimized my loss today from Beyond by cutting losses pretty early. Once I saw this, I should have cut my losses. But the only issue was I was actually in class, and I had to put away my phone. So I couldn't trade, so I wasn't watching this trade at all. So then I opened my phone back up, and the trade's already up here, and I'm down like $300, $250. So I'm like, damn. So then I just exited because, I should have got out right here, but I waited this long because I wasn't even looking at my phone. So 2 takeaways to take away from this trade is that moving on, I should always wait for the second continuation here, and I should cover right when it breaks above the level that I actually had set. And number 2, I shouldn't trade in class, but so that's pretty much this whole trade. So I pretty much wanted it to go down. I shorted it. And then next candle, false. This is a false breakout right here. I got stuck into it, and when I opened my phone back up, I was down like $200. So that's the first bad trade of the day. So after this trade, I'm like, all right, I'm already down a lot today. Now my whole mentality changes for the day. I'm like, you know what? How can I make this money back as quick as I can? So I moved to Boeing. I don't even know why I took this trade. Looking back at it, so obviously looking back at any trades, you're going to be like, oh, I should have done this. I could have done this better. But, in the moment you see this, you're like, oh, this looks perfect. It's going to push up. And you enter, and as you can see, I took a loss on this one too. So I was looking at Boeing, and I saw that it kind of broke this 162.50 level. But there was no high volume. This candle was very bearish, and I still entered. I don't know why, because I thought it was going to push up right to this 178 level-ish, and that's where I would take my profits. But Boeing just kind of started consolidating. No real price action. There's just nothing's moving. There's no big, nice, clean moves. It's just consolidating, and then we finally see it go back down, way past my entry point, and I decided to cover right here, and that gained another. I don't know how much I lost on that one, but you guys can see that on my Instagram page. I posted it. I shouldn't have done this trade. I shouldn't have taken this trade at all. This is what happens when you let your emotions take over. See, I had that first poor trade, so going into this trade, I'm like, you know what? I'm just going to try to make that money back. Poor execution, no real trade here. I don't even know why I entered, and as you guys can see, resulted in a loss. So, takeaways from this, anytime I have a big loss, I should either just step away completely, or I should enter high probability trades instead of just chasing random trades just to make up for my last loss. So my third trade of Thursday was actually the best trade all day. Even though I didn't make the most, it was still the best trade in my opinion. So then I moved on to Tesla. I saw that 570 was a support for Tesla, bounced off about 3 times. And finally we saw a break with the high volume. So then I waited for the continuation, but I actually came onto Tesla a little bit late. 11:03 I started watching it, so this kind of already happened, so I kind of missed out on a good amount of the move. This doesn't seem like much, but when you're trading options, this is actually significant. So then I entered on this candle, and I held until 560 because I told myself at 560 there's probably going to be there's a support there due to it's a psychological number. So then immediately when Tesla hit 560, I covered my profits and I walked away green for that trade, not for the day. But overall, this trade was beautifully executed. You see you have a break of a level, strong volume, and a continuation second candle. I should have entered here, but as I said, I wasn't watching this trade before, and I happened to go on Tesla at 11:03, and I'm like, oh, I might follow this. So this was a good trade. Overall, I liked how I actually followed my strategy. I told myself 560, I'm getting out. The second Tesla hit 560, I got out. All right, that's what I've started to train myself more and more to do, to just completely just follow my strategy and not let any emotions control how I trade. Because once that happens, that's where the Boeing trade happens. Just poor execution. But overall, this Tesla trade was really good and high probability play. And, I saw the opportunity, I executed, and it went my way. So, today's trades my first one was on Netflix. So Netflix, I had the 325 level set, and I finally saw Netflix take a dump. First 4 minutes, the whole market was actually tanking during this time too. So, a lot of stocks correlate with the overall trend of the market. So I was watching Netflix. I saw this once it reached this 325 level, kind of started to consolidate. I then waited for the break of this consolidation with high volume, and I entered. So I entered at 9:36. Let me just double check. I entered 9:36, and I held until 9:39, and I exited when it reached 320. I told myself 320 is going to be my price target. Once Netflix reaches that level, I will get out. So got in here short, sold right there. Nice little play. Solid. I don't even know how much I made on this, but solid play. Some people see this and they're like, oh, you could have held $5 more. That could have equated to, I don't know, another like $100, $150 just in a couple 2-3 minutes. But no one can tell the future. What I was looking at was this. I see this level. Right when it got to 320, I told myself I was going to sell, so I followed my strategy and sold. So what kind of would happen sometimes, not always, would this just starts reversing. This wouldn't have even happened. There's no guarantee this will happen. This could easily just come to 320 and bounce right off because the buyers are there, start pushing the stock back up. So I liked how I followed my strategy there, and I capitalized on a nice gain. Next trade was Roku. Where is it? All right. I entered at 940 for this play. Yeah, so Roku again, was watching Roku. 81 level, started consolidating. I then waited for the break with an increase in volume, and then I waited for the continuation. I didn't see a continuation here, and then at 9:39 I saw the continuation. I was trying to get filled here. TD Ameritrade was not filling me, so I actually got filled at 940. But it was like near the top of this candle. So then I held from 940 up to 943, and was it 943? Let me just double check on that. Yeah, 943. I told myself at $79, I'm gonna take my profits on Roku and just capitalize on that trade. Beautiful, nice 4 red candles right there. Caught that quick scalp, and made a nice percent return on that. So takeaways from this trade is I liked how it broke with volume over here, started getting rejected, and then finally broke this consolidation period and began to push down. And again, every time I keep putting these profit targets, I've been having success. So moving forward, I'm going to start doing that more, putting these just psychological number target prices and just exiting there, entering there, and just having a plan before every single trade, because going into a trade blindfolded, you will get destroyed in this market. Now next I'm just going to kind of go over just like the quick psychology of trading and the issues that sometimes like I'll post on my Instagram that I even deal with on some of my trades. For example, the 2 big ones are greed and fear. All right. So these happen when, I'll talk about greed first. So greed is when, for example, let me give a nice example. All right. So right here, someone's watching Roku, they see this big move down and they see it approach 78 and they're like, oh, this thing's going to keep going down. I'm just going to enter heavy. I'm going to become a millionaire today. All right. So that's what happens with greed. They dump in their whole account into this area thinking that it's just going to keep continuing. And what happens? Doesn't even continue. So now they enter right here with all this greed and take on a position size that literally is the size of their whole account, which is poor risk management. And then what happens? This reverses, and now they fear. And instead of selling where their strategy tells them to, when they know that this trade has won against them, they start hoping. That's another emotion that comes with trading, is just hope. The stock goes against them, they hope, they're like, oh, it's going to come back down. And what does Roku do? Does not come down, and then starts consolidating. So, that's one scenario of trades and the emotions that come with it. Another one is, let me try to find a nice example of this. All right here. So Roku again. Someone, say they buy off this break of 84, and they're holding, and their strategy told them to sell at 86. You see, so they would have capitalized on a nice $2 move, which, on options is very significant. But they get greedy up here, and they're like, oh, this thing's gonna keep going more. I'm just gonna hold it. It's gonna go to $100. I'm gonna go buy a car after this trade. So then what happens? Does not break 86.60, starts pushing down. And what do? Instead of seeing that the trade is starting to reverse and they should sell now and just capitalize on this profit, they bag hold. They believe that it's going to keep going down. They get greedy, and when they see it pushing down and they're seeing their profits just get wiped away, what do some people do? They dump more money to this trade. They're like, you know what? Since it's cheaper now, I'm going to put more money. It's going to come back up. And what does Roku do? Does not come back up at all. They end up bag holding until they're down like $1,000 or whatever, however big their account was, and then they sell. So those are kind of just the overall, just some emotions that even happen to me sometimes. I'm not perfect, but overall, this is just kind of the emotions that do come with trading. And just kind of to end this video off, I just want to say that what people don't understand is that learning how to trade is easy. You know, the technicals, learning how to read a chart, all this, watching time in sales, it won't even load up. Watching level 2, just watching those things, you can learn. Anyone can learn that, all right? But the psychology and having the discipline when trading is what makes this the hardest. Just makes it immensely difficult to succeed. The ones that do succeed are the ones that follow their strategies. They don't let emotions come into play. They just set an entry, a stop loss, and a price target. They say, all right, I'm going to enter at 84. My target's 85. When it reaches, my target is 86. When the stock reaches 86, I'm going to sell. And if the stock starts going against me right away at 83.80, I'm just going to cut my losses and move on to the next trade. It's one trade out of thousands of trades that you're going to make. So one bad trade shouldn't define how the rest of your month goes, how the rest of your week goes in trading. You know, because once you start letting one of those trades affect you, that's when it affects your whole account balance. And it just constantly, you're just revenge trading. You're just trying to you start just thinking of your past trades and saying, you know what, I'm just going to make this money back. I'm just going to completely put my whole account into this one trade and just hope it goes up so I can make that big loss I got yesterday. But that will literally not get you anywhere, and you will just fail in this market. So, that's pretty much it. My next video, I'm thinking of doing a Q&A with my friend. He's just kind of going to ask me questions. I'm just going to answer them. And probably help most of you guys out too. So stay tuned for that. And all right, thank you for watching.